Investors and traders, welcome to the channel Market Chart Pattern. Today is 24th of August 2025. Hope everyone is having a fantastic weekend. So we'll take a look at the key markets for this video segment. In fact, I've done a post on Substack. I will provide the link in the description. So I will actually go through that post. The key charts are there, the key markets that we are looking at. It's a pretty comprehensive overview. You can get the access to the charts which have been posted on the Substack through the link. As always, this video is for educational purposes only and it's not a financial advice. So last week was really interesting because we had the Jackson Hole announcement come in. That's the yearly retreat. I think it goes on for maybe 4 days during the week. And then the chairman Powell, he came out and what he announced was basically that the doors are likely open for a rate cut likely to happen in September of this year. So that's next month, and September is not too far away. But overall, it wasn't too surprising for us because we have been watching, at least I've been posting on the Substack, the key patterns for the 2-year Treasury note and also for the 10-year. And the patterns were actually identifying a move lower in the yields, indicating interest rate cuts coming in. So that was, coming in line with what the patterns have been telling us all along. So an interesting development, and I think September is going to be a month where we're going to see some pickup in the volatility because of the change in portfolios, etc., that will likely to take place in the equity markets. The equity markets have been actually hovering around our key levels, which we'll take a look at when we go to the charts. In the last couple of weeks, they haven't just moved too much. They have been pretty range bound, with the exception of the move coming in last Friday after the announcement where Dow Jones went and made new all-time highs. NYA, which is the New York Stock Exchange Index, it's actually made a new all-time high as well. And the good thing about that is because it also includes ADRs with 1600 plus stocks. It indicates that actually the market is broadening out. So that's a good thing. That previously the bull market had been concentrated in certain names which were Magnificent Seven or high-tech stocks, but this time it seems to be broadening out, which means rotation is likely to take place. So we could see a few things happen, which I'll just walk you through what I'm looking at. So we'll just move to the major stock indices and the ETF sector performance. And what we can see is that the last week actually VXN, which is the volatility index for the NASDAQ 100 NDX stocks, it actually closed higher, 3.2%, and the NDX itself, the index was down minus 0.9%, I believe. We'll have, yeah, look, you can see that. So that's a clear indication that what is happening is the tech heavy names, perhaps rotation is taking place. The investors are rotating out of them perhaps and going into other kind of stocks, maybe dividend paying stocks, which will also look at the 52 stocks making 52-week highs. And you see it's a pretty big list for last Friday, and we have stocks like ADM, the which stands for Archer Miller. It's one of the agricultural stocks. It actually made a 52-week high. So that's one thing to take a note at. In the international markets is the FTSE 100, which made 2% returns. So also made a new all-time high in UK. New York Stock Exchange Index, fantastic performance, 1.67% higher, including ADRs. Dow Jones Industrial made a new all-time high. So this is a really key thing because we have seen the NASDAQ 100 made new all-time highs, the S&P 500 did, but the Dow Jones Industrial was kind of lagging behind, but finally has done that, it's catching up. Russell 2000 is the only one which is lagging, but it also had a key pattern formation, which we'll take a look at. India, this is the SENSEX index. was up nearly about a 1%. CAC 40 0.58%, and Hong Kong this Hang Seng Index 0.3% nearly, and the S&P 500, they are in a tie here. Interestingly, the VIX, which is the volatility, annualized volatility for the S&P 500 index, got crushed, was down by minus 5.77%. But the interesting thing is VXN and also the NDX NASDAQ 100 closed in the negative territory for the week. So pretty interesting kind of formations that took place. On the month-to-date basis, the month is not over yet, but we have gone through most of the month already. It's the Nikkei, which has been the top performer, and the Dow Jones Industrial is catching up with it, and the New York Stock Exchange Index is not too far away, which just shows that the tech-heavy index hasn't performed that well in comparison, relatively, with respect to such as the NYA index or even the Dow Jones Industrial. And the S&P 500 is up by 2%, so that's good. Look, the VIX got crushed, nearly down minus 15% for months to date. And really interesting observation is that we have had a fantastic rally in the US equity market since the lows came in 7th of April, but the Asian and the European markets are still leading on a year-to-date basis. The Kospi 200, which is South Korea's leading index, is up about 34.82%. Then we have the German DAX, we have the Hang Seng Index from Hong Kong up 26%, German DAX up 22%, and then FTSE 100 about 14% is up. Really interesting what is happening here. Good to see the US stock indices also back up into the positive territory. Moving into the sectors, this is where the really important things to note what happened in the sectors. Look at this. This is on the weekly basis, the weekly returns, and the KRE, which is the small, I shouldn't say small, but it's the regional banks. It's an ETF for that. That was up 5.28%. So fantastic performance. So an indication of lower interest rate to come is actually going to help these banks, which have a smaller balance sheet in comparison to the big bracket banks such as JP Morgan, Goldman Sachs, etc., Bank of America. But these banks also lend out to smaller companies, etc. So that's why we have seen, in my opinion, a pretty nice move in there. Then we have also seen a pretty consistent move in the, let me make it bigger right here. We have seen a very nice move in the home builders as well, and that has been a pretty consistent move even on the month-to-date basis. So the expectation of the lower interest rates is actually also driving these stocks, which are home builder stocks. So that has done pretty well. XOP was quite interesting. XOP is basically the oil and gas exploration subsector of energy. It was up. It was quite interesting to see because this is one of the sectors which has actually lagged behind. Retail XRT has been doing well as well. And then, of course, we have the energy. XLE was up as well, so that's nice to see. On the flip side, the ARC indices, which are innovative technology, they were the least performing indices, and also was the technology XLK down minus 1.23%. So that's actually showing the kind of rotation I was talking about, especially after that announcement that came out of Jackson Hole by the Federal Reserve. Okay, now if we take a look at this on the month-to-date basis, this is on month-to-date basis, we have a clear winner, which is 14.81% up. This is the home builders. Everything is up with respect to, with the exception of two, which is XCR. This is defense, aerospace, and defense, which is down about minus 0.18%. So very, very small amount. The month is not over yet, though, and the technology XLK is lagging behind a little bit. And then in terms of the second highest performance is XRT, which is the retail. So I think here the message we can take is that lower interest rates are perhaps going to help with lower mortgage payments, etc. So more disposable cash for the consumers, in which they can go and spend. So that could be another reason. Then we have the KRE up suddenly to 7.96%, and we have the ARKG, which is the genomic revolution, has done pretty well as well in this time period. And then we have the XLV, which has also done quite nicely here. And retail, the real estate is also up 2.25%. If we take a look at this on the year-to-date basis, look, technology, which is these innovative technologies by ARK ETFs, they have been really performing well, with the ARKF, which is the fintech innovation. That is up 46.86% on a year-to-date basis. Then we also have the ARK Next Generation Internet ETF. That's up 46.61%. So some of these also include stocks such as Roblox, which have performed really well, which we follow in another segment for our tech stocks. They will also include some of them, even Tesla as well, which has relatively in 2025 has recovered quite a bit as well. So this is what it looks like. And then of course the defense XAR has been 30.59% because the geopolitical things that we have seen. And then after that we have this 16.0 XLI, which is the industrials. Financials have also done quite well. KRE is kind of coming back into the play. IBB, which is the biotech, is up 5.87%. It's a pretty volatile sector. Nonetheless, it's giving some returns. IYG, which is financial services, same as the XLF. So what we are seeing is technology, industrials, financial services doing quite well. With the recent move, perhaps technology less so, but on a year-to-date basis, we have seen the XLK also being up 13.24%, but lagging industrials. So here we have a list of stocks which have actually made new 52-week highs. So these are strong stocks which are making yearly highs. So that's quite interesting to see. What is even more interesting is that not a lot of I don't see a lot of the Magnificent 7 names in here. Of course, this list is as of last Friday. It will keep on changing on a daily basis. This is what I compile on daily basis, but this is what happened last Friday at the end of the week. Interesting to see the Bank of America actually making their yearly high. Then we have other names in here. Expedia Group, so which is like consumer cyclical, is their Fifth Third Bank Corp, which I believe is a medium-sized bank, perhaps, is actually making highs as well. Google is there, Alphabet, Hasbro, and this is the name which has been coming up quite consistently now. And we have got the we are in the third quarter. We will have the fourth quarter starting in October, and then we have the holiday season coming up. So that's the kind of the seasonality which exists in a stock like Hasbro, which is to do with games, Monopoly, all those toys and stuff. So it looks like it's being bought up with the expectation of lower interest rates helping the retail consumers, discretionary buying. So all of those things are part of it. Johnson & Johnson, a very nice dividend pair, is actually making 52-week highs as well. Lowe's Corporation Financial Services, Lowe's, excuse me, I don't know how to really pronounce this one, is there. MasterCard did that as well. That's quite interesting. Of course, Newmont Mining has been making the list because the gold price going higher for quite a while. Paramount, which is in communication services, is part of it. Seagate Technology, this makes the list quite often, is there. Travelers Companies, it's a triple-digit Dow stock that has done quite well. and where we can also see United Rentals. So that's another one, pretty expensive stock, nearly $1,000. I'll get there, making 52-week highs, and even Resorts is also kind of bouncing back up now. German DAX, not that great action. We have a very clear pattern formation there, so I think it's just consolidating. These are the ETFs that also made new 52-week highs, so we can see Dow Jones Industrial, of course, part of it, because Dow Jones index made a new it made a new high, all-time high, so it's part of that. Fidelity's MSCI Financial Index, so this financial services we can see communication services. There's a lot of action taking place. KBWB is very similar to KRE. This is the small cap financial is. Not small cap, excuse me. These are more smaller regional kind of banks, which are part of this index. That's there in that ETF. SPY is there, which is quite interesting, because on the index itself we have something a little bit different. So that's an interesting one. And then this is for the FTSE 100, 250. You can read it in the Substack if you're interested. It's just available free. Okay, now we'll just go and focus more on the markets itself. So we'll start by taking a look at the 2-year Treasury note. For us, the key resistance level was right in this zone, 4.63%. So this is the 61.8% retracement was coming in right here at 4.05%. So when it got there, we were watching for it. If it were to get above this zone, then the pattern formation, which is this ABCD going to 3.2 to 3%, would have failed, but that has not happened. And look, we had this massive drop beginning of August. Market went sideways, right? 38.2% retracement, and now a bigger drop last Friday. The chances are the yields are moving lower, and I believe we are in a CD leg lower, so we could get down to 3.2% to 3%. In fact, this is what it looks like in on the weekly chart. There's a long consolidation right here. One of the things about these pennants, triangles, dynamic triangles, whatever you want to call them, whenever there is a breakout in either direction, it's pretty explosive moves. This is why I like to call them DT, dynamic triangles, dynamite triangles, excuse me, because the move is quite explosive. So if it were to break below this, then I think it can get down to about 3%. This is the target on the daily chart. 10-year Treasury note, again, a lot of resistance right here. This is what we wrote down, that as long as the resistance is held, yields could actually fall to 3.7%, which is going to be quite interesting, because we are also looking at about 3% to 3.2% on the 2-year, and then the yields on the kind of longer end of the curve, 10-year plus, they are not really too much in control of the Fed, in the sense that the Fed's policies do not impact these as much as they do on the shorter end of the curve, which is 2 years and less, in my opinion. But we are looking at 3.7%, which is going to be this ABCD pattern formation right here. We could get down there. This is the weekly chart. There are several support levels based on this wedge pattern formations and stuff like that, but the ABCD points to 3.7. This is the futures view. You can see that, because it's important to take a look at these treasuries, not just on the yield basis, but also how the future contracts are being traded, because these are heavily traded markets by institutions. And it requires quite a lot of firepower to move these markets, just because the size of the markets. These are several times bigger than the equity markets, not as necessarily as big as the forex markets. This is Euro USD cable as an example, but really the debt markets are huge. Actually, credit markets, which also includes opaque stuff, would even be bigger, but this is tradable stuff. You can see there's a nice trend line right here is providing support. This is on the weekly basis, nice trend line right here. And if we take a look at this, the 30-year, which is it's a 30-year bond, is also known as a long bond, because of its long duration of 30 years. So here the yields are still quite high, and I think there is a chance it could get down to maybe around 4.7 to 4.67%, and this trend line is quite important. It has held one time, two times, so I think that's kind of a magnet for it to get down to around 4.7%, a little bit lower, because we have the 38.2% around 4.67%, so the chances are it could get there. Getting below that, breaking this trend line is really important if the yields are likely to come down on the 10 longer end of the curve, in my opinion. This is what it looks like on the weekly chart. So again, pointing to this trend line right here, 4.7, 4.67% is, I think, it could get down to. Now this is how it looks like on the futures. I've written getting above 114 in 20 seconds is actually a bullish sign. So it's getting back into that, getting back above the 20-day moving average. We have the 200-day moving average coming up as well. So yeah, I think the futures are also getting stronger from a momentum perspective. This is just the weekly chart for that. Dollar, so the US dollar is really interesting. We had this ABCD complete right at the 61.8% retracement, and we had a pretty massive move beginning of August, also when exactly the similar kind of move that we saw in terms of the yields. Here we go. So that's a big move in terms of the yields that took place. And also because the dollar and the 10-year, they have a quite a nice correlation. I'll show you a correlation just in a little bit with the Japanese yen and the 10-year treasury note. You know, they are really in a lockstep at the moment. So here, I think what it has done is last Friday, it actually blew the stops right here, then it came down and took the stops down here as well. So it could consolidate right around the 97.70, which is 61.8% retracement, but a clear close below these levels, in my opinion, where it is actually doing an A, B, C, D lower. But on the weekly chart, what we have is, let me just blow it up. We have this pattern formation that we are watching, A, B, C, D. So I think it's likely to get down to the 94 level on the US dollar. This is where the we have got pretty good support come in around 95 to 94. If we get down to exact 94, I think that will be great. 95 to 94 is what I'm watching. We are at around 97.60 at the moment. That's the close of last Friday on the dollar index futures. But so far you can see that this is very smitty. They are held 38.2% retracement. So the dollar is under pressure. This is a really long-term monthly chart of dollar. There's a lot of symmetry right here. 10 years approximately it took back in the 1990s to put in a top, going I think for the bottom around 1992, putting in a top start of the millennial, and then what we have seen is similar move about approximately 12 years now. In my opinion, the dollar might have actually put in a top right here, and then we have a really key pattern formation. This shaded region also complete around 94. This is why I think this 94 region area is very important. Pretty good support right here. Getting below this, I think it challenges a lot of things for the dollar. So it could just go in a consolidation once it reaches 94 for quite some time, or just bounce, becoming range bound again. So on the Euro USD, it's really interesting, the price action on Euro USD. Here it had gone sideways for quite some time, and what happened is it retraced right into the 38.2% around 1.16, and then it had a really nice close higher. Now, two things to take a note. So all of these since the April, late March, we have higher bottoms here. So high, higher low, higher high, higher low. Okay, so we have got the higher bottoms right here. Very important was this, where I have this shaded region, 1.142. We had an ABCD, which is an extended CD leg, 1.618 times the AB leg completing right here, with the 61.8% retracement coming nearby. So we have a confluence of two things. Plus we also had the bearish symmetry. So this move is exactly similar to this move right here. So we got the bullish symmetry, symmetry in the market there. We had a number of confluence of three things coming together. Whenever we have such a situation, we pay really close attention to, and the market just put in a bottom right here. And then what has happened last Friday is really important as well, because the market retraced right into the 38.2% retracement, and then moved higher from there after finding support also from the 20-day moving average, which tells me that it is actually a strong trending market now. So if we were to take a look at this blue structure there, and in my opinion, as long as this low is held, which is point C, we are likely in this CD like higher. So we could target 1.194, 1.21, maybe a little bit higher on the daily chart. The key thing is that this low, this point C, is to be held. If this low is taken out, then this negates this analysis. And then if we take a look at this on the weekly chart or USD, we had a number of things coming together. Basically this big purple ABCD completing right around 1.175 level, where we also had the 78.6% retracement. We just saw market go consolidate right here, push down right into the 38.2% retracement, which we have just seen on the daily chart. Is just holding that up. So as long as this level is held, I think it's got a chance to go and challenge these highs, which is doing now, and perhaps then move higher. So I'll just go with the targets for the daily chart right now first. So 1.194, 1.21 is what we're looking at. Now cable, GBP USD, so very strong as well. So a really strong support came in where we have this pattern. I had discussed this one on the Substack. I should show that. YouTube subscribers, apologies if I might not have been able to do a video about this one here. As long as this point is held, I believe we are in this move higher, this leg in ABCD in red. But shorter term, we could look at 1.3850 to 1.4050, and maybe a little bit higher to even 1.42. And on the weekly, such big range right here. We have higher targets as well, but we'll go with the daily charts for now, and focus on that first. GBP USD JPY is really important chart. This is the weekly chart for the dollar versus the Japanese yen, and here what I've also done is done a comparison with the 10-year treasury notes. In the purple line we have the 10-year treasury note, blue line is the USD JPY. What we have seen is a really nice correlation between the two. The top right here, they put in a bottom here, rallied right here, put in a top, retraced, put in a bottom, rallied, and then declined into a bottom, like more like a unison, bottoms and tops. And here what we have seen is basically the yields pull back. We also see the Japanese yen strengthen against the US dollar, so they are moving in lockstep, which indicates that if the yields are likely to move lower, which our patterns are telling us, which the Fed is now saying as well, there is a chance for a rate cut. And Japanese central bank has actually been raising interest rates. What we could see is basically the USD JPY pair move lower as the Japanese yen strengthen versus the US dollar. There is one thing to keep in mind. What could also happen in this time period is, for example, if there are going to be sharp moves, is that technology stocks, they could get impacted. The reason is that we could see we have already seen a weekly sell-off past week when Dow Jones made new highs, but NASDAQ 100 actually closed lower, nearly minus 1%. So there is leverage into the system built through the carry trade. We had something similar happen 5th of August, put in a bottom in 2024. So we can see some sharp moves coming into tech stocks, where some of the popular names could actually pull back, which also weigh quite highly in the stock indices. So we need to be just aware of that, that the unwound of the carry trade that could actually come back. So we need to keep an eye on that. On the Japanese yen itself, you can see that this is a perfect, really nice ABCD. It's moving lower right into here. range bound. I think getting below this level 146.50 on consecutive closing basis, I think we are coming back to the test the lower end of the range, which is point A right here. Now let's take a look at the gold market. So the gold market has been a sideways range bound market, pretty boring to trade as well, especially if you're trading on leverage. Because we have days up and down, especially you can see that big down days, then yeah, just confusing price action. For us, the key is this 32.50 on the comics gold. As long as it is held, then I've got a bullish bias for it. And then last Friday, after the Jackson Hole news came out, a really nice close up. So looks like gold is starting a move to the upside. And on the monthly chart, you can see that there's a lot of kind of a distribution here, but still got a chance to hit 3650, 3800 on the monthly charts is what I'm watching for. Now Bitcoin. Okay, so the Bitcoin is really interesting because it has completed this big ABCD pattern, while gold actually closed higher for the week last week, especially after the Jackson Hole news. The price action for Bitcoin has been more muted. Maybe it's just because it just completed this big pattern, and then for several weeks now, it's 1, 2, 3, 4, 5, 6, month and a half is just gone sideways. Now on the daily chart, there I've written some notes right here. What it has done is the previous correction in this entire leg higher since April was minus 12%, and this one has been about minus 10.25%, so about 2% difference in terms of percentage. And also it could go a little bit lower in terms of the symmetry as well. But if it begins to close below these levels of 105, slightly lower than 105, then I think it would indicate that we could see some complex correction in here, which could take shape of like A, B, C, D, something like that, and then it could actually retrace 50% of this entire move. That possibility is there. So range bound market, pretty boring at the moment, but interesting thing is that gold closed higher for the week, muted price action from Bitcoin, but on the other hand, the Ethereum, maybe that's also stealing some of Bitcoin's action. Actually found support from here. This is what we had discussed the previous week. Went right in the target of 1.27 to expansion, and it was pretty strong by the time I had done the report on this. Then the next level comes around 5,780 for Ethereum if it remains strong above this level. Solana, let's take a look at this. This is Solana. This is the weekly chart. So I actually found support right from the 61.8% retracement. It wasn't a very easy or a nice kind of pattern if you were watching this or trading this or holding this. But what it has done is actually found support from here and done an ABCD. It's getting to 218 level, which I'm watching very carefully. So between 218 and 220, we have got key resistance level. This is where the market will consolidate and pull back. If there's a pullback, the pullback should be as much as this BC swing is. Getting anything more than BC swing indicates that something else is happening. Then we could be looking at a head and shoulder pattern, but I am more on the bullish side for this because of the 61.8% retracement, which indicates that if once it is, let's say, even if it does this a little bit of a correction right here, it will be still higher bottoms, higher highs to follow. We could eventually look at about $350 per share level for Solana. Now let's move down to the stock indices. So I've got my timing model. This is the weekly chart. I come here into the 18th of September last week. We have got timing come in, and then on the monthly chart I also have the 2nd of September. So let's we have to give it 2 weeks. Let's keep on watching the next week in terms of what this timing could actually bring for us. The markets have been strong, but they also have been consolidating, as we'll see. So here is the Dow Jones Industrial. It went so it has made new highs for sure, but it's also right into this box. So we had this big ABCD. Now the nasdaq 100, the S&P 500 have also completed its ABCDs. The Dow Jones didn't go right into it, but it had come into the box, which had which had seemed good enough or close enough, because we got this big massive drop right in 61.8% retracement. So the chances are it is likely to maybe go move a little bit higher. We have already seen the industrials have performed better. The nasdaq tech stocks actually closed lower, nearly -1% last week. So it's likely to actually remain in this box is what we are watching. S&P 500. I had done a video on the YouTube in which we were watching this exact pattern when it was folding last Thursday, and then what I had mentioned was that we were at good support because of the pattern formation in Russell 2000 and also the 78.6% in Nasdaq 100 NDX index. We'll just take a look at this momentarily. As long as those levels were held, which were held, we have seen last Friday a move back into the top of the range. So let's see what sort of trading we get next week. And then here we go. 6,500 has been our target. The market is just, at times it's just going nowhere. It's getting closed and not just close enough, but it's just, you can see that what sort of price action we saw last Friday. But again, stocks are strong. This is what we see in the futures charts as well. Now in the Nasdaq 100, you can see the big difference between the Dow Jones Industrials and the tech stocks. I found resistance right from the 1.270 expansion of this entire move lower, and then the move lower was held actually by the 78.6% retracements, a range bound market essentially. Now what is really important for us is this 22,600 level. I think if we begin to close below that, then that opens up possibility to even 200-day moving average or 38.2% retracement of this entire move as a possibility. Right now, what we see is basically a market which is range bound in my opinion. And this 2300, 22,950 level is really important for it. This is the market right into the CD leg, which is the I think it's 1.272 times the AB leg, also completed here. And this is just the pattern on the futures. You can see that negative close for the week, and the past week was also doji, so it's just consolidating. It's not going anywhere, but intraday quite a lot of volatility. And the New York Stock Exchange Index also making new all-time highs. I think it's got a chance to 22,000. Dow Jones is also getting stronger. So here the rotational aspect which we discussed earlier in the video is there. Russell 2000, something really interesting happened last Friday. It closed above the 78.6% retracement, which had actually capped any rally for quite some time. It hasn't gone and made a new all-time high, but it's not too far away either. And if that were to happen, 2680 is going to be the kind of the target it could aim for. Okay, and this is on the daily chart. Really nice strong move. 20-day moving average, price is above that. 20-day moving average itself is up. 200-day moving average, so momentum is actually favoring that. Now some of the world indices, the Indian market, which is looking at the SENSEX, but I think they also have Nifty 50, so I'll start to take a look at that as well. But this is, I think, one of their older indices. And in my post on Substack the previous week, we were discussing the ABCD pattern, and we were watching for the market to move higher. So we've got a bounce, but last Thursday and Friday closes were not that good. Getting close to 61.8% retracement, but not getting above that. So this could actually also mean we could be looking at a complex move of A, B, C, D lower, which could take it down somewhere around here, 78,700. So it might be a start of a complex correction. Remember, it's finding a lot of resistance from 78.6% retracement. The American indices have made new all-time highs. European indices did that too. The Asian indices like the Hang Seng, European indices are stronger, but this one has not made it topped back in September of 2024, so that is to be kept in mind. Here we can go, it's still in the resistance zone. German DAX is actually completing really big ABCD pattern right here, and it's just consolidating into you can see several weeks, months of consolidation. here after having this big high move close to the completion of this pattern. FTSE 100 has been a runaway bull market right here, also getting to this point. I think this is where we can see some additional consolidation or come into this market as well. So this is these are all the key markets that I have been discussing. One thing which I have not mentioned here, a chart that I should have included, is actually the correlation which exists between the Bitcoin and the NASDAQ 100. So let me actually try to get that here. Okay, so that's a monthly chart. Let me go down to the weekly. Okay, and then let me get the NDX. Okay, and also make this a line chart. There we go. So you can see that the correlation since end of March has been pretty good between the two, and here you can see that as well. So here what I would suggest is to keep on watching Bitcoin because it's a market which trades 24/7. And if there is a risk off move in the Bitcoin, it's likely to impact the tech stocks as well. So what I'm trying to suggest here, to be aware of it and keep an eye on this. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.